Great. Good afternoon, ladies and gentlemen. It's the lunch slot, but it's my absolute pleasure to moderate this discussion on the investment landscape in InsurTech vis-a-vis FinTech. Just to put things in context, the InsurTech industry has attracted about $4 billion of venture capital and private equity over the last decade. That's roughly 11% of the total VCP funding of about $35 billion in FinTech. 40-odd startups have raised about over 5 million in funding, relatively small compared to the broader FinTech universe. We have seen 3 InsurTech unicorns and 2 highly successful listings. While these are still very early days for the sector compared to payments or credit or even wealth tech from a market penetration standpoint, it is clearly an attractive and growing opportunity for the next decade. And to unpack this topic, we have 4 of the most prolific investors in India InsurTech across early stage and growth stage. I am delighted to welcome Anand Datta. Anand is a partner at Nexus Venture Partners with a focus on early stage investments in FinTech, InsurTech, and B2B commerce. Prior to Nexus, Anand has been an entrepreneur, business leader for Bima Milvik, and a strategy consultant at Bain & Company. Thanks, Anand, for being here. We also have Anup Kumar Agarwal. Anup is the South Asia FinTech lead at IFC. Anup has led several equity and debt investment transactions for IFC in Asia and Africa across the financial services space, including banks, NBFCs, microfinance, housing finance, and broking. Prior to joining IFC, Anup was Group Head Credit and Deputy General Manager at ICICI Bank and also worked at rating agency ICRA. We also have Ganesh Rengaswamy. Ganesh is co-founder and managing partner at Quona Capital, where he leads Quona's India and Southeast Asia investment strategy. Before co-founding Quona, Ganesh led Axion Frontier Investments work in Asia, was general partner at Lok Capital, and served as Asia Director for Unitas. He also led the entry of VC firm Greylock Partners in the Indian market. And finally, we have Kaushik Anand. Kaushik is partner at A91 Partners, where he focuses on investments in financial services and technology companies. He was previously the head of Capital G, formerly Google Capital, and has also worked at Sequoia and McKinsey. To kick off the discussion, I'll request each panelist to talk about your InsurTech thesis and portfolio, and if there are any key learnings that you'd like to share. Anand, maybe we can start with you.
Yeah, thanks, Treasa. And at Nexus, we obviously believe that similar to a lot of other areas of financial inclusion, insurance is very, very underpenetrated. Also, unlike lending and others, insurance is a push product. So it takes in terms of adoption curve, it probably comes the latest in the ecosystem. However, in India, we have seen the early signs of the breakout, some of the names that you mentioned, that has already happened. We are investors in a couple of them, like Turtle Mint is a portfolio, Onshore is a portfolio. There are multiple others which are cross-selling insurance as well. So we remain very bullish, and we believe that, and we'll touch upon this others, like while the earlier phase of InsurTech in India was much about distribution and accessibility, a lot will change with the data and how insurance is actually created and manufactured, and that's what's keeping us very, very excited in the sector right now.
You want to go next in any order?
Sure. Yeah. From IFC point of view, financial inclusion is one of our key focus areas. And within financial inclusion, we work with different types of entities offering financial services. Which could be traditional financial services entities or tech-oriented financial services entities. Now, within tech-oriented, there are different subcategories, and there comes InsurTech as well. So we have a very strong focus on InsurTech. And globally, we have made quite a few investments in Latin America, Eastern Europe, Africa, East Asia, and of course in India, we have made a couple of investments here as well. Of course, this space is opening up. Penetration has to grow significantly. Different players are trying to find their own niche strategies, approaches, customer segment, products, etc. And we are looking at them and we want to back them for the growth of the sector overall. Thank you.
Hi, thanks Anup. First of all, thank you. Great to be here, and even more exciting to be with colleagues, all of whom we have done some work with. Quona, just to set the context before I jump into InsurTech, Quona is a global FinTech firm. We invest exclusively in emerging markets and largely focused on FinTech for impact. And we invest across 14 countries. And when you zoom in from the vantage point of countries of all these markets, which are largely emerging markets with under-penetration, I would still say India obviously scores in terms of opportunity and under-penetration much on a much larger dimension or greater dimension than number of the markets for a few reasons. I think the under-penetration is probably a combination of reasons, right? And part of it is awareness. Part of it is availability of products and ease of experience. Part of it is infrastructure. Part of it is just the talent. And finally, I would say all this, you bring it all together with mindset of whether insurance is nice to have, maybe you need to have, maybe you don't need to have, is it hygiene factor? So I think we are seeing a shift and evolution in all these dimensions, I think across the market to varying degrees. I mean, on a scale of 0 to 10, you might be on 3 somewhere and you might be on 7 somewhere else. But all these 5 factors are starting to move, and they're moving quite, quite positively, I would say, especially for something like health, where a number of us are part of a common portfolio company on surety as well. I think we are seeing the shift in mindset, and that shift in mindset is a much bigger need or a change you need to see in a market before you roll out all the infrastructure and application aspects. So from that perspective, that shift is what excites us the most, and we are starting to see the evolution of that in the form of implementation and success in the market. But I think we have a long way to go. The other dimension I'll add is it could be a self-serve model or assisted or embedded, right? And I think all of this evolution is possible only when the ecosystem and the infrastructure evolves. We are still literally at probably on a scale of 0 to 10 at 0.5 there. But that shift can lead to very accelerated evolution of creating products and distribution at a scale that we haven't seen before, which is very much needed for a market with less than 5% penetration across the board.
Yes, I couldn't agree with you more. I think, in the next decade or so, we should see insurance being as ubiquitous as digital payments. I think that would be a win. And I guess many of the infra startups are working towards that. But Kaushik, over to you.
Hi, thanks, Treasa. Just as a quick intro, I represent a firm called A91 where we make 100 to 400 crore investments in companies. Fin services is one of the focus categories, apart from others. Within Fin services, we think of insurance as, by insurance I mean non-life, because there's not that much going on in life insurance in the younger startup world. We think of it as maybe the highest quality neighborhood within the broader BFSI landscape. For 2 reasons. One, we see that it's the most underpenetrated, got liberalized the last, so there's sort of more growth potential. But also in terms of stability of profit pools and return on equity, it sort of stands out amongst the peer set in Fin services. Now, within insurance, we are investors in Digit, and so we continue to be quite bullish on insurance manufacturers themselves, because like in most markets where it is early and potentially capital start, the people with the license and with an ability to use technology to differentiate on products seem to have more of a greenfield opportunity than most parts of the world. Unfortunately though, there's not that many you can do on the insurance manufacturing side. Outside of that, this may be the only category where we think the layer around distribution has enough of a commission or a revenue pool. In most categories of Fin services, that's quite slim. In this category, you do have reasonable sort of commission pools. So we've actively been looking at things around which either are B2B2C or B2C to the end consumer. Yeah.
Thanks for that. Anup, you have been one of the earliest investors in the InsurTech space. So, curious to know what do you think are the most promising areas of innovation that you see in the space for the next 3 to 5 years?
Yeah, so first of all, if we look at the InsurTech space, we broadly, let's say if we categorize, you look at digital insurers, right? Then you have digital distributors, embedded insurance, then data analytics. Let's say these are the 4 broad subcategories within InsurTech space. And innovation is happening in each of these areas across the globe, what we are seeing, in different markets, and quite similar in nature. For example, what we are seeing in East Asia or what we are seeing in Africa, and same things we are seeing in India. So, for example, we have invested in a couple of companies here in India. One of the company offers embedded insurance product for gadgets and appliances on-site go. So, for example, when we stay in Mumbai, right? And here, if the mobile phone gets damaged, then I have to run to Lamington Road to get it repaired. And here comes a company which says, okay, we'll go to your home, fix it for you using tech. So then the other company is OnSurety. Now here, OnSurety focuses very clearly on certain market segment. This market segment was not getting access to health insurance product. The MSME, employees working in MSMEs. And they have come up with a very interesting solution, which is a holistic solution. Now, so some of these things are happening. Now, if we reflect back, some of us may have forgotten, some of the innovation which has already happened. We take it for granted. So if I go back 30 years, I remember going to an insurance company branch office, trying to find out, okay, what is the premium I have to pay, and then they will come take out the file and they'll guide me, okay, this is the amount you have to pay, go to the branch, make the payment. Now what happens? The innovation is in terms of payments, which has already happened. Click of a button, I can make the payment. Cashless, again, we are taking it for granted, right? Some of us are having this facility, some don't. But still, this innovation has happened. Now, some of the things which are likely to happen and yet to see some, solid business cases is linked to, let's say, Gen AI, how that can impact in terms of customer experience.
Yeah, I was waiting for that.
Yeah, so we want to actually see, how insurance companies will use this, as a solution for dealing with customers, giving them very good experience, let's say assistance 24/7, claim processing, etc. Embedded insurance is very interesting, how it really helps scale up and allows the companies to reach to the markets which they are not able to reach otherwise. And another interesting angle is how cyber risk is coming up. So maybe there is an interesting innovation which will happen with respect to cyber insurance products and how they will be offered, how they will be priced, etc. So across the board, there are different types of solutions which are coming up. One other interesting feature which we are noticing is bundling of products. So it's not only about giving a standalone insurance, policy, but also like combining with, okay, you can go to this hospital, we can make this doctor available for you. So life becomes easy of a customer. So like this, different pieces of innovation are happening and they are actually helping expand the insurance market and solution for the customers.
Got it. Ganesh, anything you'd like to add? Or I know you have common portfolio company, but aside of that.
No, I think Anup covered a lot of the points. Maybe I would just challenge us on 2 fronts. One is in general, insurance is still at a very nascent stage in the market, right? So first and foremost is being able to create ubiquity of access. And so the way we think is, yes, there'll be individual elements that will make a radical difference, hopefully to an experience, but on a full stack basis and as an experience as a whole, we have to be able to create basic penetration and access. And that's kind of where we'll probably see a lot of innovation. So experience will have to be at the point of, well, or rather access will have to be at the point of customer experience. If we think about that, that landscape is dramatically changed in terms of 10 years back, the offline, online, digital, physical, how our experiences were, they're changing significantly today. So that's just one dimension, by the way. It's the same dimension on product, infra, etc. But the point is, first and foremost, I guess we need to tackle access and ubiquity of quality access. We're still struggling with that. Similar dimensions, we have struggled on underwriting side, which is a combination of quality of data, analytics, a bunch of things that Anup spoke about. But how do we get better at that, which can drive further ubiquity of access? The lesser quality we have there, the more we will be, we will hold off from taking risk. Because we're just going to underwrite what we can easily underwrite, not the rest, which again is probably bulk of the market, right? And the last piece on that, not on that dimension, but the last piece which I'll throw more wide open is just the lifestyle of 2020s is very different from lifestyle of last decade, and the next decade is going to be very different. So we should not be solving for yesterday's or today's problems only. And what I mean by that is the way you live, the way you experience, like digital warranty wasn't even a thing few years ago, even though the companies have been there for a while. We would not have taken it seriously enough. Now it's probably an essential element. So that whole dimension of climate risk, lifestyle risk, and the kind of products or needs it leads to, that's a whole different dimension. I don't think as startups and even as investors, we are really exploring that as much today as the need, as the exponential need that's going to scale up in the next 5 to 10 years.
Right, no, that's a good segue into, our next point, which was on segments of insurance. I mean, we have life, motor, health, which are mainstream segments, and then we have other areas like crop, climate, professional liability, corporate, MSME, etc. And Kaushik, you said that you talked about certain areas of interest, but would love to understand from you what segments of insurance you find most promising from an investment standpoint over the next 5 years.
No, I think it's interesting because the segments which create the most sort of press or noise may not necessarily be the best way where value is getting built. If you see over the last few years, there's been lots of sort of attention around micro insurance and so on, but we fundamentally think to build a large business, irrespective of what you're doing, you have to be in one of the 3 big categories, motor, life or health, right? Having said that, there are some pockets where even though the top line potential may not be as large, they are very profitable. So one of the categories is, of course, like mobile reassurance type businesses. There's overseas travel insurance, which is not a very big category, but it's extremely profitable. So there are some profit pools you can access to sort of bolt on if you have a business focused on one of the 3 large categories. We've not evaluated life that closely, so don't know where that is trending, but at least we've seen cycles play out around motor and health. I think the last 2-3 years were fairly difficult around health insurance in terms of COVID and what happens with claims ratios and hence affecting growth, but we're seeing that sort of pick up quite quickly. And we are also starting to see some basic forms of innovation happen around health insurance, so that's a category we are quite positive on for the next 3-4 years. We, thanks to the Digit experience, we saw motor and motor third party and how that scaled. But having said that, it feels like that market has sort of got heated now that everybody has seen it. So maybe going forward, we are not really sure how the next few quarters or years are going to pan out.
Got it. So you're saying, there has to be a mainstay, which is, life, health, motor, one of the large categories, and then you can tap into these, smaller categories. Interesting. Would anyone like to add? Okay. So moving on to the next topic, because we've so far seen sizable capital infusion in distribution as well as the underwriting side of insurance, and some very early bets on infra, claim, analytics, and so on. And Anand, you talked about this briefly, and you've been an operator as well. So, would love to hear from you. What is which parts of the insurance value chain do you think, look most attractive from an investment
Yeah,
standpoint?
and because you were asking Treasa, I'll also add to the, like, tie this up to what Kaushik was saying. See, and whatever we are seeing, insurance is a very hard product to do. Like, while we are talking about, and this is a session on InsurTech, it's not as easy a place to invest in others, because it's simply, if you are to understand insurance as a product, it's a very high trust deficit product. In lending, the organization is giving the money to the customer. In payment, it's a flow. In insurance, you are putting all the ifs and buts out there, right? That I will take the money from you, I may or may not give you this money back if some condition happen which I will assess. So what I'm trying to get to is that a lot of this trust leads to the under penetration of the product as a whole. So what we are excited about is the value chain where you are able to create trust or product differentiation using some of these metrics, some of the technology or the underlying changes that you can bring. That excites us. And now if you want to take example, like Anup talked about payment. If we see the innovations that's happening in payment, why should insurance be one bulk pay if I don't have the ability to pay that way? Shouldn't it map to the cash flow of, let's say, for SMB, it should happen monthly. I was in a company called Bima where we were trying to do microfinance across Southeast Asia. And this is the same behavior. I launched Philippines for them. I launched Indonesia for them. For all of them, like if you look at an auto driver, he does not have the paying ability to give you 10,000 rupees for a year, but he has the ability to give you 1 rupee every day. And let's say end of the month, if you have 30 rupees, then the claim should be like the premium should map his amount of coverage should be around with that. So these are the sort of different, similarly, what we're talking about, new digital pool of customers are getting created. So the distribution, if you see, we are talking about vehicle insurance, but interesting experiment is what Cred is doing with the garage, or what Park Plus is doing. So we will, and that's again a trust layer, because I probably trust Cred for different reason. I'll say that, hey, I'll pay this. Maybe this will help me in claims and whatever other process. I'm making a leap of faith over there. But my entire thing is that tech will cause business models to simplify, by which different parts, paying, taking the money out, trusting on that business model will become easier. That can transcend whether it's a vehicle insurance, health insurance, life insurance. That will create new business models which will create new companies. So we are, to your question, sorry, I went all this round, is that we are staying very bottoms up on that with an open mind on seeing what is the delta that you are creating which creates this trust for the customer to adopt. Because in a younger demography, which is very carefree, which is not, nobody wakes up in this 20 years, 25 years age group saying that I'm going to die tomorrow, I need a life insurance. That doesn't happen, right? So what is it that will create that penetration? What is the delta that you are doing? That is where the value will get added. And not just by going by that, yet another vehicle insurance, yet another digital insurance, yet another distribution platform. That's how we are approaching the investment thesis over there.
Got it. So leveraging points of trust that already
Leveraging
exist.
point of trust is a very good way to put on. Like, how do you create that?
Great. So switching gears now, I'd also like to extend the discussion to understand some of your investing experiences outside India in markets like US and Southeast Asia. So keen to hear from you, Ganesh and Anand. How your investing experience of in some of these other markets compares with India from an InsurTech standpoint.
You're the senior person.
We can debate that. But no, thanks, Treasa. I think from a market perspective, I would say disappointingly, insurance as a need and product has been equally misunderstood across a lot of the emerging markets, where we invest. So in that sense, there has not been much of a difference in terms of challenges we see across these markets. And we have a portfolio company called Sunday in Southeast Asia, which is arguably the largest licensed InsurTech in Southeast Asia across markets. But the challenges are very similar in terms of adoption. It's probably more exaggerated because the infrastructural evolution in India, in certain cases, in terms of bringing the digital infrastructure which enables some things more easily, is moving at a faster pace than in some of these markets, where it's Thailand, Indonesia, Philippines, or even what we see in some of our portfolio companies in Africa. So I would say that probably creates more friction when we look at Southeast Asia or markets like that. The second dimension is, I would say, also from an adoption and opportunities available at point of experience. They're still limited compared to India. And the customer mindset is still, I would say, evolving at evolving where you still get challenged a lot more on whether this is really a need or nice to have. And so the under penetration, I would say, is the penetration rather is evolving at a slower pace than what we are seeing because of the combination of mindset and infrastructure evolution being slower. Having said that, I think some of the markets, the regulatory progress is very impressive, right? Like one of the countries has actually called, the regulator has called Sunday to work with them and design a digital insurance license for the country, right? Now that is not the kind of, that's the kind of move which surprises us and in a very, very welcoming way, I would say. So in some cases, you also get surprised in smaller countries by progressiveness of individuals within a regulatory ecosystem. But otherwise, I would say the net as a package, we have more things that have come together in India faster to help accelerate the growth.
Interesting.
Yeah, there is a very clear. So we have invested in a US insurance company as well. It's actually gone to IPO. It's called Clover, which is more in the affordable care space. You'll see that there is a stark difference in two different, different ways of where the society is. Based on that, where penetration and education is a problem if you talk about South Asia and Southeast Asia, whereas in US and Europe, it's more about how to make it more affordable because the claims are going. But what will also happen is that in India, probably in some pockets, that will already start getting copied earlier because it's not just a one monolithic society that we have, different parts of societies that we have. But what you'll see is that and that gets driven by the demography also. And that's where some of the insurances, you'll see insurance segments. Now, if you have to take a bet, I'll say that health, vehicle, digital, these sort of segments will pick up faster than life or pure term life and all that, just because of the demography or the younger demography that we have in India. Similarly, under penetration in the social formats, if you see, like a lot of health insurance covered by the employers in the West, whereas that doesn't happen in India. That comes from the smaller scales of the organizations that we have in India compared to the large corporates we have in the Western world. So a lot of these will play angles into what grows in different geographies, just pure on the consumer demography and where the society is compared to how the economy is.
Please.
Sorry, while Anand was talking, flashed one more point. See, one of the things, especially when you talk about US and when we contrast with US and our markets, I think some of the insurance ecosystem opportunities have become so specialized in the US versus some of our markets are probably a couple of generations behind. And I guess the ecosystem and investors also need to be able to understand that difference, because there's a lot of benchmarking that goes on. Insurance is one area where actually it applies a lot less than other areas, because there are different kinds of specialized TPAs in US. It's just one vertical where there are a lot of specialization. Here, you will struggle to say, why do you need, you need to be able to do claims and fulfillment on your own as a principal provider, because nobody is doing a good job of actually completing the fulfillment need. So I think we are at different points, and that's something important to remember. So generic solutions will still probably be the way to go. Having said that, building full stack generic solutions is not easy in insurance. And that is part of the dichotomy of ecosystem and investors that market is struggling with when you try to compare with Western models or US models that have succeeded, at least in what we see in engaging with investors in India and Southeast Asia.
Yes.
Yeah, on this point. Given the type of investments that we have made in different countries across the globe, we see some interesting pointers there. There are certain business models where it's not winner takes it all, right? So there is room for multiple players. But for certain types of players, if somebody becomes big, it's very difficult for other players to come in and create a market for themselves. There are niche opportunities available, let's say in embedded insurance space. And then there is also an opportunity for becoming a global player. So let's say if you are in data analytics space, you can offer your solution globally to different types of, let's say insurance companies or other partners all over the globe. So the point is that from InsurTech point of view, you could be either global, you could be regional, you could have a niche strategy. So that's one key part. Now the other interesting observation that we see across our portfolio companies that we had certain assumptions when we made the investments. In some cases, we have seen that they have exceeded our expectations. In some cases, they have not been able to meet our expectations. But what is interesting is we find them really resilient to, especially let's say when COVID happened, the markets really changed, suddenly growth got affected. In the health space, the medical costs went up, so the claims went up. But then these companies fought back. So we saw a lot of resilience, quick to act in terms of rethinking about the strategy and how to reach the market, reducing costs, becoming more sustainable. So these are some additional trends which we are observing, and I thought I'll just add.
Thanks, Anup. Moving on to the question of IPOs, given the strong liquidity we've seen in public markets and multiple successful listings in the InsurTech space, I think PB FinTech and GoDigit, of course, had very successful IPOs. I don't know if MediAssist and Star Health can be classified as InsurTechs. They're definitely in the insurance space. So what is your outlook for InsurTech IPOs over the next 3 to 5 years, Kaushik? You're the growth investor on the panel.
No, I think like in most categories, if you have proven out your economic model, I think the markets are very open, and today's market, maybe even without proving out your economic model, it's open. But I think where it has been challenging is if it is sort of not figured out in terms of how you make money. If you're saying I'm doing X, but then I will do Y to make money, I think that's a bit more complicated. In Digit's particular case, given ICICI Lombard and Star Health were listed, what you realize is that when you go public, people are picking amongst a variety of options. Some of them will even compare it to a life insurer, to a bank, saying that is cheaper, why should I buy this? But what you realize is that whether you get positioned in your private markets or as a startup or insurance, InsurTech, eventually when you go public, you're a set of numbers where people are comparing each other. And so you need to be able to stand out. If you're using technology, you need to be able to stand out to be able to do that. And so you've seen it now with Digit, with Policy Bazaar, that the moment that happened, the markets are fairly open. In InsurTech, unlike in lending or in some other segments, firstly, there are not as many companies. And secondly, maybe lesser sort of scaled up companies, some of which were mentioned on the panel before. So it's not that we see 2-3 IPOs happening every year. But we do hope to see at least over the next 5 years, saying can 5-6 more companies be listed.
Yeah, especially given the capital intensity of the sector, right? I hope, it can tap into public markets at the right point in their life cycle. This has been a very serious discussion. I guess that's the nature of insurance. So on a lighter note, I read this tweet from a founder yesterday that 75,000 fintech professionals will reach GFF, debate and dream new fintech ideas, and they will go back realizing that NPCI has already built everything and there's nothing left for them to build. And in the last 3 years, we have seen a number of regulatory interventions from IRDAI with the vision of insurance for all by 2047. The stated objective being that every citizen has appropriate life, health, and property insurance, and every enterprise is supported by appropriate insurance solutions. IRDAI has announced the launch of Bima Sugam, which is a unified platform for insurers and distributors. Could this be the UPI moment for insurance, and is this an opportunity or threat for InsurTech startups? Any of you?
I think it will take time. My honest answer is that I think actually the other one we are mentioning is Ayushman Bharat is a very, very big effort. It is not only created the education about insurance, there is a trust that's getting created, and there is a demand from different pockets coming. Now with Bima Sugam, why I say so is that, again, which I touched upon in my first comment, that insurance is a push product, it will remain a push product. There is a layer of agent which acts as a trust layer, again because of the nature of the product, that you have to believe that you'll get the money back when you want. Now there will be comparison websites, there will be people will, because it's a commoditized product also, so people will like to understand how where I'm getting the cheapest one. All that will happen. However, to get that trust layer to come into completely like a UPI sort of a motion where everything moves to that, it will take some time for that to happen. Unfortunately, my take is a little bit more defensive, cautious, whatever you want to call it over there.
So then we must hear from.
I think we have time for controversy, so we will let it be. No, I think the gestation period of a massive change, and in this case, it's not just technological change. In payments, it was a technological change, which was important. But here, it's a massive mindset shift as well. I don't think it happens easily, and it shouldn't. We have to be a lot more responsible about it. Unfortunately, when large initiatives are launched, we try to measure everything in a hurry and try to make things happen in a hurry. And in fact, this morning, I was having a panel discussion with a gentleman from ICICI Bank who said, financial services is not like startup business, not like break things fast and stuff like that. We cannot afford to do that. It's not right. So we got to be cautious about large experiments, and in terms of its cascading implementation on consistent ability to sustain a very important need like insurance. I think we got to be cautious about that.
So I would just want to add on a positive side, this initiative creates a huge opportunity for women actually, in terms of taking the product to the market, create awareness, and we have a very strong focus on the gender side. So we are looking forward to seeing, how it really evolves.
In an effort to try to stick to time, I'm going to have to bring this panel discussion towards an end. Ladies and gentlemen, please give all of our panelists a huge round of applause. Thank you to each and every one of you for your valuable time and your insights. I would request you all to kindly come forward for a group photograph.